This is your LMAX Exchange technical update for Thursday, January 12th, 2016. Euro dollar. So the euro continues to extend its correction out from those recent 14-year lows at 103.41, and the market is running into resistance now, which comes in above 106, around the 106.50 area. If the market can establish a daily close back above 106.50, then it could extend the correction higher, though ultimately it would take a break back above 108.75, that high that we saw in December of 2016, to take the immediate pressure off the downside. Sterling dollar. So cable saw a nice sharp reversal in Wednesday trade, and this sets up a bullish outside day, which could mark could signal additional upside over the coming sessions back towards the 125 area. At this point, overall, the downtrend, the longer-term downtrend, remains firmly intact, and only a back above 127.96 would compromise that downtrend. However, this latest upside move could open the door again for some upside over the coming sessions. Dollar yen. So dollar yen continues to extend its correction after putting in a multi-day high at 118.67. There is room for additional downside over the coming sessions towards the 111 to 112 area, but ultimately this market is constructive and a higher low is sought out ahead of the next major upside extension beyond 118.67 and through 120. Euro Swiss. Euro Swiss has been consolidating recent declines, but ultimately the focus now is on a retest of the 2016 low at 106.24, with only a breakback above 109 to compromise this outlook. Aussie dollar. So Aussie has seen a very impressive correction higher over the past several sessions after the market stalled out just shy of key medium-term support at 71.45. Ideally, the market should be looking for a lower top, though, below 75.25 ahead of that next major downside extension, though if we do see a breakback above 75.25, it could shift the structure and open the door for additional upside. Dollar CAD. So dollar CAD setbacks have intensified with the market pulling back, closing in on key support at 30.81. That's the low, that higher low that we saw going back to December. But if the market breaks below there, it could open a more significant shift in the structure to the downside. Inability, however, to establish below 30.81 will keep the pressure on the top side and open the door for fresh upside over the coming sessions. Kiwi dollar. So Kiwi is seeing a nice correction higher after recently trading down to as low as the 68s, but at this point the market should be looking for a lower top somewhere below the recent lower top that we saw up around 72.40 ahead of that next major downside extension through 66.76, which is the next medium-term support. SPX 500. The S&P 500 continues to consolidate just off recent record highs, and there is risk for a fresh push beyond the 2280 area record high towards 2300 further up. We would need to see a break back below the low that was seen back on the 30th of December around 2232 to take the immediate pressure off the top side. Gold. So gold continues to extend its impressive run, showing the potential for this longer-term base as it once again was supported down towards 1100 several days back, bouncing off the 1122 area. At this point, a daily close above 1200 will strengthen this constructive outlook and open the door for a potential retest and break above that 2016 peak at 1375. Any setbacks should be very well supported, again with only a breakback below that recent low in the 1120 area to compromise the newly adopted constructive outlook for gold.